ever seen one of my videos before, you have seen these statistics in the top left of my chart. These are the statistics of the strategy that I am currently running, and they are necessary to prove whether a strategy has the potential to be profitable or not. So in today's video, I'm going to show you how you can gather statistics just like this and the correct way to gather and use them to prove a strategy's profitability. When you are backtesting a strategy, you really want to be looking at multiple different market structures and ensuring that the strategy either thrives or at least stays afloat in market structures that maybe it's not necessarily built for. There's no such thing as a strategy that's going to always make money no matter what the market's doing. The point of building a strategy is you build it for a specific market structure. Say, right now I'm running a continuation strategy. So obviously, this is looking to capture bullish market structures, but it's important to ensure that when you don't have a bullish market structure, that the strategy at the very least doesn't implode. It's not giving up all your gains. ThinkorSwim has an extremely valuable tool that can help us test our strategies against different market structures. It is called OnDemand. If I click on this OnDemand icon up here in the top right, you'll notice I get this little yellow border. It says OnDemand in the top left. And what this feature is doing is it's going to allow us to go back in time. Actually, right now, I've already got it set up as I was doing a little testing here before I fired up the video. I have it set up to be running in January of 2023. So we've gone back on the chart 2 years in time. And the reason I want to test this is because 2022 was a bear market year. So I want to see how my continuation strategy performs during bear markets. However, there is a major issue with my custom created backtest data study, and that is that it only works when running against the largest available time interval for the aggregation period. So if I'm looking at a daily chart, this study will only load in the statistics when on max available. If I hop down to 1 year, because I just want to see the statistics in 2022 using this on-demand feature, my statistics up here break. But I now have finally fixed this. Actually, I shouldn't even say that I fixed this. Some awesome member of our day trading strategies community sent me in an email with an idea for how to fix this backtest data, and it worked. If I run this new code now, you will see even on just running against a 1 year time interval, I can see my backtested statistics. Before we continue with this backtesting lesson, I just want to let you know where you can access this custom study. This is my website, daytradingstrategies.net. Click on our codes, check out the price, get signed up if it sounds interesting to you. You are going to get access to over 80 different coded strategies, scanners, studies, etc. within ThinkorSwim, all for one low price. I'm going to come into studies. I'm going to go ahead and use this Bollinger Band reversal. I'm not going to scroll down and give you the backtest data for free. But what you would do is you would scroll down on this page, and every single code is going to come with one of these share links. So hopping back into ThinkorSwim, all you need to do, set up in the top right, open shared item, paste in that share link, preview, and import. Just like that, the study is now available from your edit studies modal. All you would do is type in DTS. That's what I prefix all my codes with, add it to your chart, and there you go. So obviously, looking at these statistics now, just from the year 2022, the strategy didn't do very well. You would expect that. Once again, this is a continuation strategy, and we're looking at a bear market. The point is, how poorly did it do? It lost $3,000, just barely over $3,000, during a period in which the market dropped over 28% from highs to lows. And this strategy right now, as I'm running it, is set up to take $25,000 positions. So when the market goes down 28% and us trading $25,000 positions only lost 3 grand, that's not that bad. We actually outperformed the market pretty well, even though, yes, we're down, but hey, the end goal here, right, it really is to outperform the market. If the market sucks, everything's going to suck. That's kind of life for bullish trading strategies, right? So this strategy seems to be okay during bear markets. I mean, for a little bit of context here, when we were looking at that Nvidia chart earlier, running this same strategy, on one trade on Nvidia, this strategy made over $15,000 in like a 3-month hold. So just once again, compare and contrast. How well does the strategy do in the market structures that it is built for versus how poorly does it do once outside of those market structures? Is it giving up all of its gains? Because that is not a profitable strategy. If you have a strategy that makes a lot of money in really, really strong bear markets, but then loses it all in bear markets, what did I say? I meant to say really strong bull markets, but loses it all in bear markets. That's not a good strategy because a bear market could come. I'm not saying I think it's going to, but a bear market could come at any time. You need to ensure that your strategy at minimum stays afloat during those downturns in the market. Let's actually hop over and look at the same strategy on the Nvidia chart in the year 2022, because you want to do a similar compare and contrast with the bull run of Nvidia versus the bear run of Nvidia. During 2022 on Nvidia, the strategy lost just over 10 grand. Obviously not great, but during this time frame, Nvidia from high to low lost over 63%. I don't know exactly what the math is, but I know that 10% is less than a 50% drawdown of 25%. It's probably more something like a 40% drawdown of our $25,000 position. So we still very, very much so outperformed the Nvidia market with this strategy. And if I come back out of the on-demand feature now, we are looking at the real-time today's chart again, still just over the last year time interval so that we are comparing the same time intervals. You can see the Nvidia chart is up over $12,000. That's just in closed positions. It's actually currently in a trade and up just shy of $15,000. So the strategy outperforms in a bull market what it underperforms during a bear market. And when you utilize this sort of backtesting strategy in comparing smaller time frames of stocks, you begin to learn not only when the correct market structures to trade certain strategies is, but also the types of stocks that work the best for a strategy. For this continuation strategy that I've built through using this sort of backtesting, I found that these volatile tech names, sort of mostly the Magnificent Seven, tend to be the best performing with a continuation strategy. So I trade Nvidia, I trade Tesla, which on the year is up over $16,500. I trade, what else do I trade? I trade Meta. Meta on the year is up over $6,200. Actually funny. The closed trades are up over $1,000, but it's currently in a really nice winner is this strategy. If I could get this line drawn, thank you, ThinkorSwim. Currently up over 19% in a trade. So the open position is up over $6,200. We're going to come back to more tips for how you can efficiently backtest a strategy to further prove if it is profitable or not. But first, I want to talk about this code and how to gather the statistics if you don't have access to a custom study like this one. This custom study is not required for backtesting. Building custom coded trading strategies is not required for backtesting. You can do all of this by hand. You can write down conditions for when you would like to enter and exit trades, and you can go through and find every situation in which those conditions are true, write down the entry, write down the exit in an Excel sheet, and then perform these calculations by hand or by keyboard, I guess, in an Excel sheet. Why code is so powerful, though, is look, listen, obviously, you're going to speed up the data gathering process and you're going to speed up the speed at which you can see the statistics. But even more than that is it is so much harder backtesting is than just building a strategy, gathering the data of the trade entrances and exits, and looking at the statistics. That is simply step one of backtesting. The next steps are you need to adjust your conditions, adjust the parameters of your trade strategy, run the backtest again, look at the statistics, see if they got better or worse. Then you want to repeat that over and over and over, and you almost want to be continuously repeating that because you want to always have a strategy that is staying on top of ever-changing market conditions. The market never remains in the same condition forever. It's not going to ever just continue trading the same way. You want to be continuously optimizing your strategies for the current market structure. So you always want to be able to quickly adjust those parameters and see how it changes the performance. That becomes extremely time consuming if you are not utilizing code. You have to go through every single time you want to do that and find all the trade examples. And once again, you want to find them on multiple different tickers. You want to find them on multiple different time frames. Stuff is very, very time consuming. Using code as codified trading strategies and a code like this backtest data will save you at minimum tens of hours for every single strategy that you build. And if you end up building a handful of different strategies, which you should, I'm a big proponent of trading multiple different strategies at the same time so that they help to cancel out each other's cons. It's going to save you hundreds and hundreds of hours over the course of your trading career is this sort of code and codified trading strategies like this. And this will be the last time I open up my website on this video, I'm sorry, but I really do, and I know this is going to sound self-serving as I own this business, but I really do want to help you. This code, as I aforementioned, will save you hundreds and hundreds of hours of time. I'm not allowed to tell you that this code is definitely going to make you money. And maybe it's not. That is not a guarantee. But what I will guarantee you is that it's going to save you all of those hours of time. So do you value hundreds of hours of time in your life for $30 or less? If you do, getting this code is worth it for you. And not to mention that you get access to over 80 plus other codes in ThinkorSwim. And as long as you remain subscribed, you get continued access to codes that I add every single week. If, of course, you would like to unsubscribe at any time, very easy to do. Just 3 mouse clicks under the My Account tab and you can get unsubscribed. Now make it as easy as possible. I don't try to lock you in or do any of that scammy cancel crap. Make it as easy as possible to cancel as well. So really consider signing up, if nothing else, for this backtest data code. I promise you it's worth it. Oh, and just quickly, remember how I mentioned that one of our members actually sent me the code fix for my backtest data study? I gave him free access to my course for sending me that because it helped me out so much. I just want you all to know that he did get some kickback for helping me out. All right, so we've talked about testing across multiple smaller subsets of data by adjusting the time interval of the chart and specifically looking at time intervals in which the current market structure is maybe opposite of what would be preferential for your trade strategy. All that's very important. What I want to talk about next is the kinds of stocks that you want to run your backtest against. Because you can't just look at Nvidia and go, oh wow, this strategy made a lot of money. It must be profitable. First off, Nvidia is obviously a rocket ship. This thing is super duper strong. Any bullish strategy is going to be profitable on this thing. And second off, it's just one name in just one sector. You want to look at Nvidia and maybe a couple of other sort of volatile tech names as we've been doing, but you also want to take a look at McDonald's, see how the strategy performs. Something like Waste Management, see how the strategy performs. And also some weak stocks as well. One of my favorites to run a backtest against is Block, SQ, because this stock has gone very strong up and very strong down. it kind of gives you that idea all in one chart of, does a bullish strategy give up all its gains when that market structure changes, right? And right now, I am trading my reversal trading strategy. I've put on a new one, and you can see this, in fact, does not do that. Look at another weak stock like AMC's been extremely weak for an extremely long time. This strategy looks like it captured a few bangers while it was strong and then hasn't touched it again since. A way that I really like to guarantee that I am gathering a good subset of data across my strategies and that I am always capturing the same subset of data so that I can more directly compare my strategy's performances is by every single strategy I go through the alphabet of stocks. I type in ticker A, I type in ticker B, I type in ticker C, and I do this all the way A through Z. Next, I would type in D. And what I do while doing this is I write down a couple of the statistics per chart. I really only worry too much about two of them. Now, every statistic up here is important, but the two that I focus on the most are the average trade P&L and the max drawdown percentage. Listen, anybody can make a strategy that makes a lot of money. That's really easy to do on a static subset of data, to create something that makes money. Where you can start to get the kind of statistics that matter for the likelihood of a strategy translating from back testing to actual live real money trading, I have found are these two of the average trade P&L and max drawdown percentage. And then I will compare the results of one strategy to another. Once again, this gives me a direct comparison of a random subset of multiple different sectors in the stock market. Also, once you start to do these comparisons, I've turned on another strategy now. We're back to my runner's swing continuation strategy. Looking now at this strategy and comparing it to the statistics of my reversal strategy, I can look at things and be like, okay, well, why does this strategy work better on this chart? What kind of market structures are going on this chart versus maybe why does it not perform so well on this chart compared to the other strategy? What's the market structure going on here? This will continue your education of building out your trading playbook so that you have a handful of different stocks for different market conditions, and you understand now what market conditions should exist for you to apply which strategies. We've talked about a lot in today's video. Hopefully you've learned a lot. Hopefully you go check out the site. And once again, if you value all the hours of time that can be saved by using both custom coded strategies and this custom backtest study, then go sign up for the codes on the site. Or if you would like to learn how to build these strategies, these studies, these custom scanners yourself, check out the course, check out the price of that. Feel free to sign up for that if you would like to learn how to code exactly like I do within ThinkorSwim. With all that being said, if you did learn something, please hit the like button. Make sure you're subscribed to the channel if you would like to continue learning. And with all that being said, I'll catch you all in the next one.